Hey everybody, and welcome back to this week's episode of the Vancouver Life Real Estate Podcast. I'm joined here with my co-host Dan Wertel, and today we have a special guest on the show. Welcome, Keaton Bessey. Hello.
Hey, thanks, Ryan. Thanks for having me.
Yeah. So Keaton is a property manager. I'm going to let him introduce his company because it's got a lot of syllables. And maybe Keaton, you can tell us a little bit about yourself and maybe a little bit how you started your property management, your property management company, and then we'll get into a little bit about your side of the market and what you're seeing and all of that kind of stuff.
Yeah, for sure. So, it's a mouthful, the company name. It's Greater Vancouver Tenant and Property Management. We did that because it cuts out a lot of the main questions is what do you do and where do you do it? Well, that's solved.
All of it there.
We understand it crunched down to Vant PM, which I thought sounded kind of like European and cool before I started the company, but it doesn't. So it's the domain name and that's about it.
Awesome. So, tell me a bit about your role in property management. When did you start as a property manager? Where did you start? And how did Greater Vancouver Tenant and Property Management start?
Nailed it. So it goes back a really long time, actually. So my grandparents were developers in Northern Alberta and Red Deer, so they own some, mineral rights and farmland and stuff, and they got into storage and everything, but they owned a plot of land up in Cold Lake, Alberta, and that's where I was going to be born if they had a hospital that my mother would go to at the time. So I was born officially in Red Deer, but the first 4 years of my life were spent up in Cold Lake. My grandparents developed a 40-unit townhome, row home community up there that housed a bunch of Air Force pilots because the Air Force is right up there on Cold Lake. And my dad was out there shoveling the snow and, wiping his beard off in the 50-degree weather, just literally snaps right off your face. Collecting the rent back when you go kind of door to door and that kind of stuff. And that's kind of where it started.
So family business, really.
Yeah, essentially. Yeah. I mean, now it is, yeah. So when we moved to Vancouver in 92, and that's when my dad ended up separating himself from the family business and got licensed back when, I can't remember when they started licensing people, but around that time.
Yeah.
And then he started working with Gateway Property Management when it was a small company, and they grew to well over 100 staff and nationally. So myself, I jumped in there about 10 years ago, just from the restaurant business. So I came in a role don't break the photocopier kind of stuff. Go get your license and here you go. And then it's been a decade from there. So.
Wow. Good for you, man. So let's talk about your business and kind of what you provide, because I think, I know for myself, I deal a lot with investor clients and generally speaking, clients who have investment property. They often don't want to manage it, or they're too busy to do it, or they don't know how to, probably all three.
Yeah, that's fair.
So what do you do? What do you provide? What's your service?
Yeah, so really simply, the main value we provide people is if you have an empty property that you don't need to live in, but you want to keep it, we can fill that property for you with a good tenant who's going to take care of things. The way we do things, I've kind of been calling it an institutional level tenant. So we do all the screening, all the vetting. We screen them, as much as you may be if you're getting a mortgage. Honestly, we're really looking at the financial underpinnings. We're looking at the full credit report, all their lines and that kind of stuff, and just giving clients ultimately the locked in revenue. They have a lease in place. They're happy with that, and they can rely on the rent coming in the door.
Right.
We like to post our rental collection rates through the years, and through 2020 we collected 99.8% of rent, and a lot of companies can't even do that in a good year. And then this last year we collected every single penny. So those are the kind of tenants that we're getting.
Incredible.
Maybe thank the government for that.
Yeah. There was money available. So which areas do you service, Keaton?
Yeah, so we say Greater Vancouver, which is true. We have clients from West Vancouver is the furthest we'll go on that side. We're in North Van, downtown in Vancouver, obviously, Burnaby, the Tri-Cities, all the way up to Maple Ridge. We get into Surrey and Delta, of course. We try not to get below Highway 10 or 56th Avenue. Half of Maple Ridge is kind of too far to service, really.
It's big.
And Richmond, we can do. It's far because we're based in Burnaby. and we don't get a lot of inquiries from Richmond, so it's kind of like a mutual agreement that we just don't really do a lot of stuff in Richmond. But other than that, we're fully Greater Vancouver, and we also can help clients literally throughout BC. We just rented a home in Chilliwack, another one in Abbotsford, actually referral from you guys, so thanks for that, the Abbotsford referral.
Yeah, no problem.
Where the clients actually show their home, but we do everything else for them. So we do the screening, the setups of the appointments, the marketing, the lease, everything. We will go out there to do a condition inspection report if it's within driving distance. So Chilliwack, fine. Abbotsford, fine.
Cool.
Kamloops, not fine.
So if somebody, you mentioned that, if somebody's got a vacant property, that you'll go and happily help them rent that. And obviously you've got the process and the screening methods down. Do you specify in condos, or are we talking apartment buildings? Are we talking single family homes? What are we talking, or all of them?
Yeah, so our current portfolio is literally just anything residential rental. What we're actually going after specifically is single dwelling homes. So these are condos, townhouses, or houses. If it has a basement suite in it, we're not really interested in the basement suite unless it has a separate address, it's legally done, it has its own hydrometer, those kind of things. That's ultimately what tenants want, and that'll get you top market rent and a good tenant. We find it's too difficult to get that like institutional level tenant with the great credit, with the good income qualification, all that kind of stuff
in a basement suite.
Essentially an illegal suite.
Right.
You're not going to prison, but it's an illegal suite. But that's what we're focused on. We do have apartment buildings in our portfolio as well. But we're really focusing on who we call the consumer real estate investor, people who own one or none or just a couple and just really need that help and that guidance.
Cool. Well, let's maybe talk a little bit about the market, because I think a lot of our listeners, they understand where the sales sort of side of things are. We talk about it every week, but we don't often talk about rents. We maybe touch on it lightly, but I'd really like to know, because, we've had inventory depleted, over the course of the last couple of years, and we've seen prices shoot through the roof. When the pandemic first started and everybody kind of left the downtown core, we saw rents and prices drop. But I think largely that's come back now. Can you touch on that?
Yeah, well, downtown came back. Downtown was a boomerang. So I think you guys saw the same thing on the sales side. People rushed back there in droves. Yeah. A little bit of an outrageous example to downtown. We rented a 2-bedroom condo there, I think in August or July, and it was a great 2-bedroom, like low level, very nice little view, very clean, well done, like over 800 square feet, which would normally go for $3,000 downtown. Mm-hmm. Yeah. We barely rented it for $2,400, which is crazy. Wow. Very recently though, we posted a studio apartment online. It's in a 95-year-old building. And it's a good unit, but it's just there's only certain people who want to live in a studio apartment in a 95-year-old building. Laundry is shared, all that kind of stuff. And we knew it was the price was $1,500. We could run 100 applications and find 1 or 2 people that could actually afford that amount. That's why we priced it at that rate. From after the week that we posted it, there were more clicks, not views, not likes, or clicks on the ad. When they opened it up, looked at the photos, looked at the information, there are more clicks on the ad than there were minutes in that week since it was posted. So it was around 9,800 minutes in a week. There was 11,000 clicks on this one ad, and that's a downtown West End apartment. Wow. So that's the kind of volume that we're seeing today. Wow. As far as like rents, making changes, unlike the MLS, like for sales, you have all that data, it's all available, and people often think that we have that too. It's not. Yeah. Right? There's the Zumper rent report, which is based on what information they collect, but they're not collecting signed leases. They're collecting listing prices, which are not, at the end of the day, what they rented for. So
interesting. Nice. Pre-pandemic, we were sitting basically at 0% vacancy across the Lower Mainland. Where would you say it is today?
Worse. So
negative.
We can't. Vacancy is, CMHC does their study. Being employed in property management previously at Gateway, overseeing thousands of units, we were part of those studies from CMHC. So we get an email, we give a lot of our accounting information, basically what it was turnover ratios and market rent and everything you'd expect, them to collect on data. Yeah. As a individual, we have 120 doors under management right now. As an individual company, like a smaller one, we've never been asked for it, the last 4 years that we've been operating. So they don't have that data. They're definitely not calling every single individual landlord and every single person who might file for the speculation tax and say their thing is tenanted or not.
Right.
And really, how good is that data? So vacancy is messaged out by CMHC based on apartment buildings through like third-party property management companies where they get it all. And it's a good number. It's based on apartments.
But it's not accurate.
No, and you can't, it's very, very hard to pin down a vacancy number because somebody who is maybe having a kid soon and they're in the market with you guys maybe and trying to buy a townhouse now, go to their condo, we're going to maybe rent it, and then they put it on Facebook for 2 weeks and just kind of see what the market's like. Is that a unit available? Is it actually going to rent? We have no idea.
Yeah.
All we look at is like, what's the vacancy of a restaurant, for example? If it's full, it's full. If there's two people in wait, you got 5-minute wait. If there's 500 people outside, come back next week or book next month. And how do you quantify that? You don't.
Right. Interesting.
So, but otherwise, you're saying that the heat is tremendous to the point where, let's say, for any given rental that you might have, you're likely going to have a wait list or multiple applicants.
Yeah, we don't. Wait lists are a waste of time. There's no point in even managing them. It's
in this market.
Here it is. Here's all the information. This is when it's ready to go. Okay, this is the date. You can come see it. Schedule.
Do people compete? Like, obviously, you're going to have different applicants for a property, but do they also come forward and say, "Hey, look, I know you're asking for 2,400, but here, take mine at 2,500." Does that happen?
They do. So through our application process, we really like to control the process and the experience of all the applicants and our landlord clients. So the very end of the applications is after you've reached out, you've booked a showing, you've shown up, you've got the information, you've then filled out the whole application. The last required item on the application form is, what is your rent offer? And it's a web form. So you don't fill it out, the whole thing goes away. And that is to make sure that people are actually putting in a number.
Right.
And most people just put in the asking rent. Our clients are happy with that. We're happy with that. That's all we're asking for, the asking rent. We have seen people bid up. And what we found is that people that try to bid up 9 times out of 10 couldn't afford the asking rent. So they just get wiped off the map anyways. We do reach out, see if they have other income, savings, that kind of stuff, but they just get removed. It's the people that do asking rent. They've filled out all the information as we asked. Everything checks out. Let's move forward.
Interesting. So you would say to a client who's looking to rent a place, well, you've got 3 applicants to choose from here out of 20 that applied, right? You've got 2 at market rent and 1 who's offering you more, but a little sus on his credit. Would you then advise the landlord to take a lesser amount, but with a certainty in that contract?
No. So actually, a part that we're kind of learning that is a better value to landlords as we go through this leasing process is that landlords only get the applications that we fully vetted and are ready to go.
I see.
So when we send a landlord an application, it's 1 at a time, and very rarely is it more than 1, and it's just based on the timing of how all the information has come through.
I see.
So we can get these done quickly. We get tenants screened within the day in most cases, as long as they paid attention, which is something you really want in a good tenant. They read and they're reasonable and they follow instructions. Right. So it's part of the test, but they get that done. We send that out to the landlord. And if another one is screened after that, we'll send that as a backup offer.
Oh, I see.
If it's a better situation where they have actually, maybe they have offered a little bit more and they can afford it, then it's like, hey, this one wants to, pay more, or they want to move in earlier, or they don't have a pet, for example.
I see.
Those are all landlord's rights, and so that would be a more attractive offer for that landlord, right? But
cool.
So supply is an issue, just like it is.
Let's take a moment for that.
Yeah. But what is your experience, or what kind of data research have you seen in regards to vacant properties? Because there was a study done in October of last year that boldly stated there's about 1.3 million vacant homes across Canada right now. How do you feel about that locally? Are you experiencing that? Are you seeing it? What have you heard?
As far as I'm concerned, and we deal with homeowners almost exclusively, is there isn't anything empty, right? We look at, I very straightforwardly call homes human buckets, and we have a bunch of human buckets, and they're there, and all of them have people in them as far as I'm concerned. I think it was BC Hydro or something that pulled the data. It's like electrical usage or whatever.
Right.
And it's fair, right? There is a business case to just buy a property, sit on it. That's what the vacancy tax is for. But we're not really seeing that a lot. We don't have the BC Hydro data, so there might be a lot.
Sure.
but that vacancy tax isn't cheap. So,
or like you said, maybe, all the tenant can afford is their rent and they're not paying their BC Hydro.
that actually doesn't really happen that much because it's on the tenant. BC Hydro is actually caught up. They're shutting the lights up pretty fast now, we've noticed. So, yeah.
It's funny because when I rented my first place, I think I got Hydro for about 6 months for free before they clued in that I was flicking on the lights for free. But that was way back in the day.
Yeah. Very nice. Okay, so when it comes to rental increases, right? We're in a rent-controlled province. You've got history in Alberta, which does not. What is your angle on it, and what do you advise, let's say, people who are landlords themselves?
Mm-hmm.
Especially, sorry to interrupt, especially through something like the pandemic, when just to fill a spot, you had to drop rents a lot. But then, of course, the ability to increase that up to market moving forward is next to impossible while that person's in there. Mm-hmm. So how is that kind of landscape navigated?
Yeah, so when we're advising our clients, like, first of all, like, the government's going to give you whatever maximum rent increase that is, and people see that as, oh, that's the rule, and they throw their hands up and don't actually think about it. So the government's mandated rent increase for 2022, for example, is 1.5%. You can only do that every year. But what that actually means is that you can send your tenant the rent increase notice. They don't have to sign it. You just have to prove delivery. So we can email, because we have the form filled out with all of our tenants that we can communicate with them via email legally. So that's sent, and then it's done. And then 3 months later, they start paying this 1.5% increase. For that client that we rented that property for $2,400 downtown, and now they could probably rent it for $3,000. If we just rented that property for them and they're happy with it, but if we were managing it on an ongoing basis and the time came for a rent increase, we would say, one, it's definitely under market, and because we qualify our tenants strictly on income, we know we have the margin that they can afford it. And you can always test them by sending them 1.5. Worst case, they move out and you can now re-rent it for $3,000 a month, basically, right? We look at that for each client. The other side of it is that for condos and individual single dwellings specifically, the owner always has the opportunity to sell it. And we are using that as a bargaining chip occasionally with tenants, where it's like, hey, would you like to stay in the home? Do you want to negotiate a longer term lease? And if they do, we're now renegotiating the lease altogether. So if they agree to different length of term, we can agree to a different rental rate. We then include that they understand the mandated annual increase is this amount, and they're waiving that. And we've put many deals together like that where the tenants can afford it, the rent is increased, and they get a longer term in that home.
Okay, that was huge. So investors out there, re-listen to that if you missed it, because that is a very, very pro tip for you about how to potentially increase rents and do it legally.
Yeah, and I like that, because, when you look at the fact of, like, what happened in the pandemic, right? If you were a property owner and you were an investor and you were looking to keep cash flow, you had to drop your rents. There's no stipulation on how low you can go.
Yeah.
It's interesting because in the stock market, they'll just stop trading if things get too gnarly. They'll just turn it off.
On the downside.
On the downside, but not going up.
Yeah, weird.
And conversely, we can drop rents as low as we want, but we can't go back up. That's a pretty unfair situation considering what's happened in the last couple of years, right? Now, that being said, as a landlord, you have to make concessions and you have to make things work. But generally speaking, I like your position. You come back to that market rent idea. So there is a negotiation that can take place. It's just about how you go about it.
Yeah, and it's just all about affordability, right? Like, you wouldn't give somebody a mortgage who can't afford it. Why are we doing that for rent?
Right.
And there are a lot of people who are, 40, 50% of their income paying rent, and they got into that situation because they were not screened properly.
Right.
Like, that's the whole thing. The problem has been created by the fact that you can't increase the rents. If you did, they move out, they find alternative housing. They have to. Like, that's just, they're going to have to do that. I'm not advocating for kicking people out of the units and jacking the rent up.
Of course not.
But if there were less restrictions, we would have an actual market, an actual information, and we could react to that versus just trying to restrict people from doing things and pissing everybody off.
Interesting.
Mm-hmm. Okay, so for those people who maybe are new to investing and they want to put in management as a line item, or maybe there's a manager out there who is self-managing but they want to get out and they want to know the costs and services related, what do you guys charge and what do you give for that?
Yeah, for sure. So we took a little bit of a different approach to the normal what you'll see in the market if people listening are reaching out and getting property management proposals and contracts and stuff and looking at them, they're going to find generally the charges are between 5 and 10%. I've heard 12 lately now, which seems a little bit crazy, but that's fine. Good for you guys. You can charge 12 out there. But yeah, generally 5 to 10% per month of the rent. And this is rent due to the owner, not rent that property manager has collected, because the last thing you want is a property manager not being paid while they're trying to deal with your RTD dispute and those kind of things. So that's a big one. The second one is property management companies will charge a half month's rent or $1,000 or some sort of flat fee to turn that unit over when it is vacant. So what we've done with our clients is that we've said it's 10% across the board. If you're with us on the full service manager for 10%, we don't charge you a leasing fee or turnover fee. We do charge an engagement fee to any new client. It's $350. So we spend that out the window on photos, paid ads, getting our team to site to start showing the property and everything. Mm-hmm. We really charge that just to make sure you're serious. You're actually making a commitment. Once you pay me $350, you're not just walking away. And if you are, thanks. Like I'll take $350. I'll cash that check. But that's why we do it. And then after that, $350 once. If you're with us for 10 years, it's just 10% of the rent per month. The whole time, we'll turn that unit over 3-4 times for you. It's all free. It's all taken care of.
So it's full service in that respect.
Full service. If it's not full service, we want to know what it is so we can figure out a way to squeeze that extra thing that you want in there.
Right. Okay. So I've had a colleague who had to deal with a professional tenant once. And what, of course, that means is they know all the rules and laws and know how to abuse them. So that tenant got in and then did not pay rent. And of course, you can kind of walk people through what that looks like, but it's a frickin' nightmare and incredibly hard to get people out. The tenant rules here the tenancy laws really favor tenants in this province compared to some of the other ones. Alberta, again, for example. I think BC emulates Ontario quite a bit. But yeah, maybe if you can walk through people why getting a manager is so important, because what does it look like if you have a professional tenant abusing the rules in your property?
Yeah, for sure. So like the big one, like a professional tenant, and we've all heard, look up Globe and Mail articles or Google them. There's just an endless parade of tenant horror stories. But if you have somebody like that, the first thing, hiring a management company versus doing it yourself, there's sometimes you just get this gut feel that you hear with, famous last words. I had a good gut feel about this person, and you end up, giving them possession. They've paid rent. Take the security deposit as you're like getting a lease from somebody that you're working with, and the tenant said they're going to sign it. Okay, cool. You now have zero control over this tenancy. A tenancy is created instantly as soon as that tenant pays rent. You've received it. It's done. It falls back on the Residence and Tenancy Act, and you're in it. And the really big issue with that is if they are purposefully moving forward to not pay rent and save money, kind of like Ryan with his BC Hydro situation.
That only happened once.
I won't tell them. If they're doing that, if you have to kick them out through the RTB, they do have the direct request process, which is usually the quickest we've gone through the 33 days to have a tenant physically removed from the property through the RTB, which is way faster than what you hear on the streets, faster. Right?
Yeah.
If you're doing it properly. But if you don't have a written lease, you can't even actually apply for that direct request process, in which case you're kicked down the line as a normal eviction situation or a monetary order hearing, which today is 4, 5, 6 months down the line. Wow. This isn't like next month, and you can throw your hands up and complain about the RTB all you want. It's the law. Yeah. So that's the biggest one. Outside of that, with an addendum, like a properly written addendum, it's not a list of things the tenant cannot do. It's not, you can't do this, you can't wear green pants, you can't wear silly hats. Like, that's not what an addendum should look like, and that's what we've seen. An addendum should help the tenancy move forward better in regular business. So something that we have in our tenancy agreement is the tenant has listed their email address, and they agree to accept notices by email, which the RTB now, or the Residence Tenancy Act now allows, like 6 months ago. And then we can serve notices by email, which makes it incredibly easy to now help manage your tenancy in a bad situation. That's just one of the items on that addendum, but it's just things to make sure that the tenant coming in understands this is what they're doing there. They're not Airbnb-ing it. They're not processing a bunch of marijuana and all that kind of stuff in there. These are the pets. These are the occupants. Done.
So it sounds like to me then, really going through a professionally managed service, you avoid this headache. You're gonna more or less catch that professional tenant prior to them getting into the unit for the most part.
We will. I mean, we've collected all the rent. All of our tenants pay the rent.
Right.
And like a professional tenant, again, should have been sued by now, and that will show up in the court search registry and on their credit. So if you're doing those things, which you may not have access to as an individual landlord, you can't just run somebody's credit.
No.
You can't see that, and even somebody bringing their credit report to you, you don't know if that's real. Like a professional tenant can doctor that. Like, I mean, nowadays you can doctor anything.
So how do you think I got BC Hydro for 6 months free?
Exactly, yeah. You got them on the run.
So out of curiosity, I mean, you could imagine obviously the frustration if you've gone and accidentally or even been, handed fraudulent documents, right? You were bamboozled, you've got this bad tenant in there. Why does it take 6 months? Like, the owner still has to pay their mortgage. But, how has the system gotten to the point there where someone can have someone in their house not paying for 6 months?
Do you want the real reason, or do you want the form reason as to why? there's somebody else who can make a change, and we all know that's the government. Sure, that's the ultimate answer. But the issue is that they haven't gone through the process correctly. So we're like, I'll get into, there's 5 or 6 landlord groups on Facebook that I'm a part of. I think actually your investor group is one of them that you guys run. And people are constantly putting, the tenant did this and the RTB is not letting me do this. And they throw their hands up and they don't even ask a question. They just want other people to be like, I know, I hate this, I hate that. The government this, the government that. Yeah. But they don't actually realize they've filled out the information incorrectly. Because you're never going to see me or hopefully another one of my colleagues go on that website or go on that thing and put that into the landlord chat. Like, the RTB, this is like, no, do your job, but like, get this done. There is a process. Right. And that's the main problem we see today, because it seems like the RTB is still cleaning up from COVID and everything. It's really kicked down the line. Yeah. So it's very, very bottlenecked, and they did some budget change in 2017 to increase the RTB's budget. And that was sure, thanks. And nothing's happened since.
Well, the government fast tracked, a $4 million fund for a housing accelerator fund too, and yet there's still 500 duplex applications in the city of Vancouver backlog they can't even get to.
No, $4 million will get you 2 duplexes, right?
Well, those headaches definitely sound like I would pay 10% to have them eliminated. Yeah, let's say that. Yeah,
cool. So let's. I just want to take because you're seeing all kinds of rents and you're seeing the action on the other side. Like, we often, we're obviously dealing with the purchase of that unit, but on the once that unit has been purchased, if you're going to be advising an investor right now on the kind of property that they should be buying and where, what kind of property would you recommend, and what's going to maximize their return on investment? Is it a townhouse? Is it a condo? Is it a single family home? What's the best move, in your opinion, for cash flow?
Yeah, for sure. So I have an article on our website, and it was written 2019, so before COVID, and it still stands true because it's just like really boring advice. If you're playing the game of asset appreciation, the client should be talking to you guys, right? You guys are the pros with assets. Yep. We're the cash flow experts, and if you can match that together and be happy about it, good. Yeah. If you're buying this thing for your great grandchildren to have, and you put that in your will, and then you want the cash flow, right? Yeah. It's gonna appreciate anyways. So you want the cash flow. So what we really look at as most cash efficient property to buy is going to be a 2-bedroom, 1 bath if you can find it, near the SkyTrain station or near like a lot of transit. And the reason being is multiple. One, you're generally going to buy these cheaper than a lot of other units. Mm-hmm. And I think, I remember I looked at some numbers before because I asked a couple other realtors to look this up for me. But if you had a 2-bedroom, 2-bath in a building and then an identical 2-bedroom, 1-bath in the same building, same floor, everything's the same, even facing the same way if that's possible, the unit with 2-bed, 2-bath is going to sell for more dollars per square foot
for sure
than the 2-bed, 1-bath.
For sure.
Which, who cares? You're buying this to create money. You're not buying this to live in or appreciate. Yeah. It's fine. It's still going to appreciate. It's just not as much. So you can buy them cheaper. When you're doing renovations and things, you have 1 set of bathrooms to fix. And if any of your listeners have renovated a bathroom recently, it's expensive. So let's not let that eat into your children's inheritance. And the other nice thing about it is that it's not going to rent for as much as a 2-bedroom, 2-bath, but it's going to be damn close.
Right. And so your margins are better.
Yeah, and a 2-bedroom, 1-bath, caters to essentially the entire market, no matter what the economy is doing. You're getting small families who are trying to grow. You're getting a couple roommates, or you're just getting a professional who just use the other bedroom as a den. Like, this hits every single price point, every single person through any single market.
Okay.
And that's the one we like.
It's good advice.
Yeah, that's great. You must have an immense amount of data and sort of you can view and almost predict trend lines now. So we're quite curious about where you're seeing an increase in demand, an increase in rent across the GVRD that's kind of outperforming the other areas.
Yeah, so on a percentage basis, really it's just the ones that were cheaper before. So those are kind of your outskirt areas. So we just, with the one bedroom we just rented in Chilliwack, after 1 day of showings, went for $1,450. This is a one bedroom condo in Chilliwack, and it's not like a 700 square foot condo. This is like, I think it was just under 600. This is Chilliwack.
Wow, going for
$1,450, and that was a bid up. $100 more than asking. We're still asking $1,350.
Yeah.
Wow. And they bid up. They can afford it. $1,450 done.
Well, because the cash flow makes sense on a purchase on a one bed condo in Chilliwack at $1,450 a month, right? Yeah. Because, you know, it's still a lot more money to rent a one bedroom downtown Vancouver, but the cost of acquisition double.
Yeah, well, I mean, a one bedroom in Vancouver, we just rented a one bedroom, just False Creek. It's a 700 square foot one bedroom, so a bigger one, good size. That one for $2,400. Wow, but that's not double.
Yeah, yeah.
So it's not, if you look at the asset value and just the ability, like the barrier to entry, if it's 300 versus 800 or 700, it's a lot easier to get into.
Totally.
And same with Abbotsford. Just rented the referral to you guys, $1,900, 2-bedroom out in Abbotsford. Wow. That was Burquitlam before the pandemic.
Wow. That's incredible.
So someone with roots in Alberta, do you still pay attention to that market?
I try not to. It's been so depressing for so long. No.
Well, and that's why I'm bringing it up, because for the first time in about 7 years, you know, we've seen property appreciation as much as 10% for Calgary, at least.
Yeah.
That generally means the rental market is coming next. Mm-hmm. Are you seeing any indicators there, or like you said, you're just not even paying attention?
I don't follow Alberta. However, the basic indicators of rent increases are very different from buying and selling, as you guys know.
Yeah.
And when I was looking at your questions here earlier, you guys were talking about interest rates and stuff. The underlying things that make rents go up are increasing incomes. Because at the end of the day, people just won't afford it. And we all know how Canadians like their finances. We always pay our housing bill. Yeah. We're very conservative financially, even though there's some big mortgages out there nowadays. But people generally tend to try to rent things that are within their budget. Sure. And so we do see that. So without incomes going up, rents just generally don't go up unless we have, you know, people coming into the country with a lot of money as well.
So that's interesting, because I was going to touch on interest rate hikes. I mean, as of yesterday, the Bank of Canada decided to hold on their interest rate. And I think everyone's going to have their own opinion about that. But generally speaking, that has a direct impact on our environment, right? But it's interesting, because if interest rate hikes come up or down, and that doesn't really affect your income, the rental market, like you said, if it's a direct derivative of income, then are we really going to see much of a shift?
Yeah, I'm not sure, because I don't really know how much the interest rate increase when it comes, hopefully in March, come on, how much that will increase transaction volumes, in which case, like, from our experience, the biggest reason people move out of rentals is because the landlords are making changes, and it's because they're making their own lifestyle changes that if the renter was in the landlord's position, they would do the same thing. And this is just how the economy's all pinned itself in. So if interest rates don't increase transaction volume, we're going to see a lot of people sitting. When properties do come up, there's still going to be, as we talked about before, no buckets for people to move in. There's no supply.
Yeah.
So things will just kind of sit. People can still increase the rent, but if those incomes aren't coming up, rents won't go. They can't. You won't even. I tell clients, I can sign somebody up for $3,000 a month on something that should rent for $2,500. But over the course of the year, how much of that $3,000 or $36,000 are you actually going to get?
Yeah.
And that's the end number.
It's interesting, because we there is this dichotomy in Greater Vancouver, and it's been a narrative for decades that income doesn't support the price of homes, right? Like, the home prices here are so out of whack compared to what people earn. the big element that doesn't ever enter that conversation is the massive transfer of wealth that's also taking place, right? But I find it really interesting that I almost clicked in my brain here that, rent can't also support the price of housing in many ways, right? No. So, and that is a direct result of people's income. So it's like you've got this rising property value, right? The asset class continues to rise in value, but the servicing cost can't go with it. So you need tons of capital.
Yeah, and that comes from the bank, which comes from interest rates, which
right.
is how it all kind of barely works.
Interesting. Yeah, it's that could get really out of whack really easily, in my mind, very quickly.
Yeah, it feels like a house of cards. I still don't understand as to how it's still up, but it is, and it keeps surprising us. Like even January looks crazier than November.
I mean, we did see a wage increase, right? Inflationary, in my opinion, but we did see a wage increase. But again, I mean, we're talking like 3.5%, right? We're not talking 10% or anything, enough to move a market, in my opinion. Considering a 20% gain in property prices, I don't think we've seen a 20% gain in rental values.
Not even close.
Right. No, and that's a direct, so my understanding now is that's a direct derivative of people's income.
Mm-hmm. Yeah. And what you are going to see is because of the limited supply of rentals and because of the high numbers of, immigration you guys talked about in your other podcasts, is that you're going to, the rent is just the best last one rented. And so if you got 20 people showing up and you've got one person coming in from England or something and he's a Google developer and he makes $200,000 a year and he just wants this condo because he's tired of looking around, he's just going to rent it. Yeah. And he's going to pay whatever it takes to rent it. And now it's, now 2-bedroom condos in Quillam worth $2,600. They aren't. Yeah. It's just that guy agreed to pay for it. And now you got to find that next guy again.
That's a bit of a change that's maybe taking place in our ecosystem, though. I mean, we are bringing in a lot of permanent residents. Mm-hmm. And I'm all for immigration. My parents were immigrants, all of that kind of stuff, right? There has to be a way to make that work. But it sounds like to me then, while incomes might be stagnant here, when you talk about developers or people that work for global companies that are moving to Vancouver, there is going to be a big change in what they're getting paid income-wise versus what maybe they're earning here, right? So it'll be interesting to see over the course of time, especially in the next 3 years, as we continue to bring in 400, 411, 420, 430,000 people per year, how quickly that rental market could change as a result of higher incomes coming into the province.
Mm-hmm. Definitely. We're seeing the change already. We actually ran a little area code test through our tenant data right when the pandemic, we're into the pandemic in May, and before that, and we were testing how many local versus not local numbers there were, and it was like it was like a light switch turned off. It was a light switch. Yeah. There's just nothing. And then now the number of people that are coming in again from out of country and
it's higher
across the province and everything, just moving for better jobs, and it's more offer letters than pay stubs. But you call up HR, they're there. Okay, right. Sweet, let's go.
Huh. How many of these people are tenants that you guys are working with turn into homeowners?
We don't know yet, but that's what we were talking with you about earlier. So they do, when we do chat with them when they're, they give them their notice and they're moving out, because we're always trying to figure out what they did. You're in a studio, did you upgrade to a 1-bedroom, or you move in, or what happened? And the vast majority of the people we talk to, they're all upgrading. So these are all people that have worked hard and saved money and got a better income and now upgrading. We just moved out these 2 roommates in Surrey Central, and they're just the perfect, they're sweet kids, super nerdy, the best tenants. Clean, they basically had no furniture, and all they did was work, and they're developers, they're awesome. And they were moving out, we're doing the move out inspection, and they just said, so you guys, moving up in the world? And they're like, oh yeah, I'm gonna move to Kamloops and buy a house, and I'm going to work from there because my job allows me to do that. And they're from out of country, so they've never really been to Kamloops. Just going to try it out. And the other one's upgrading into Vancouver somewhere. And I said, oh, you guys sound like you got some big raises. And they just look at me they're kind of kicking their shoes into the ground. And we're moving up. And that's the general feeling that we get from people when they move.
Interesting. That's very interesting. It's sounds like the pace of change is coming from outside the province. It sounds like it's more global companies pushing this. Obviously, a ton of tech. I mean, Vancouver's known now as sort of the Silicon Valley of the North. And Dan and I tend to put a lot of buyers who come from all around, and typically it's Canadians returning from, say, a job posting in Atlanta that they went down for 3 or 4 years, and they come back, and they're also bringing with them, now they can work remotely, being paid in US dollars, or being, or at least their income is based in US dollars, right? And that's just such an advantage versus people who work here, right? And that's on the buying side, but it sounds like while everyone's up in arms about the buying side, it sounds like that rental side's coming too.
Yeah, when there's nothing to buy, that's your other option.
Yeah.
That's the problem.
Yeah.
And I mean, some people, the people that we deal with are by definition like financially conservative just based on our income qualifications. And so they are the people that are sitting there. If they're paying, 30 or 25% of their income on rent, it's because they're saving 20% of their income to build up that down payment, or they've already brought some stuff in too. So that's their next step, ideally, right?
Do you ever see any rent to owns?
It's no, but like I'm not a big fan of it just because I would never rent to own.
Yeah.
And I think somebody who actually understands what a rent, like if you have a pros and cons list and actually walk somebody through as their client to rent to own,
it's better to rent, save, buy.
Yeah. Why are you giving somebody else your savings and down payment?
Yeah.
Right? It doesn't make any sense. Keep it for yourself, pay the rent, take care of the place, and then if they want to sell it to you later, buy it. But
don't rent it. Don't rent to own it.
Yeah, exactly. Yeah.
Yeah. Cool. Okay, well, I mean, I think we got a really good kind of perspective on what's happening in the rental market. I really like the information was very interesting and quite eye-opening, especially for those professional tenants. So Keaton, if we have people who are looking to rent their own properties or looking to get your help, what's the best way for them to reach out to you?
Well, people with all the technology and stuff nowadays, they really like stuff fast. So if you want an instant response with an opportunity to get a proposal for services and just get access to my calendar and really talk with us more, you can text one word, homeowner, to 604-256-6930, and that'll get you right into our text message system.
Cool.
That'll turn around an instant response, giving you everything you're going to need to reach out to us. And again, access to my calendar. So we're happy to talk to anyone on your listening to this for sure. Cool. Try it anyways, book a call. I'd love to chat with you if you're on the fence about buying a rental property, or you're not sure what to do, or you're just digging into it and just learning now. I'm happy to have that conversation and then make sure they get set up with a good realtor to go shopping, and those guys are in the room here. So.
Amazing. Appreciate that. And for those that want to learn a little bit more about you and your business, what is your website?
So it's Gvant PM, that cool European sounding one.
Gvant PM.
Yeah. So GVANTPM.com.
Cool.
Or you can just literally search property management Burnaby, and we should be number one, as well as Coquitlam. So we should just be top 3 in the map pack there. And it's Greater Vancouver tenant property management. Not hard to find.
Awesome. Well, I think that's everything for this week. Guys, thanks again for listening. Keaton, appreciate you coming on the show. And we'll tune in next week.
Yeah, thanks, guys. It's been fun.